in these markets. So again, we're trying to get people engaged in the markets, and we're going to hopefully interview some young traders in the future. A big shout out to Tasty Trade. Tasty Trade is a great options trading show. You have to check it out. It's also run by Tom Sosnoff, who's the founder of Thinkorswim and a 30-year the Chicago Options Exchange trader. So you should definitely check out Tasty Trade. There's a hilarious co-host, Tony Batista. They have lots of shows. They have shows about options trading, and then ranging all the way to technical analysis. It streams 8 hours a day. It streams between 8 Eastern and 4 Eastern, or 7 to 3 Chicago time. To let you guys know, we're also doing a call-in segment, so I'm leaving the lines open right now during the segment between 4:30 and 5:30. The lines will be open until the show ends. The number is on your screen there, but just to let you guys know, 312-970-9058. That is Strategic Trading Radio's number. If you want to send an email to Strategic Trading Radio, send an email to strategictradingradio@gmail.com. So this is a chart of the S&P. So we've just had this kind of miserable grind up for traders. This has not been fun for most traders. You see, we're having a little downside action. We really need to see some bearish tape action, but hopefully we can see something, because we had this ranging the other time. But the S&P's had a very strong close, so maybe on another up opening you can sell the S&Ps here. If I go to a 15-minute chart, you can see the S&Ps just rally back. I don't know, maybe you can short into the 1685 level, and you can sell the S&Ps on an uptick, but otherwise, I'm not really sure. For an options trader, you definitely have to stay short, and it's becoming very hard to try to stay short these markets. Trading has been no fun for options traders, and it has been very tough. So looking at the S&Ps, I mean, it's kind of a depressing picture for us traders. We've had 9 months of this grind. We've seen some more two-side trade, which this trading was great, but this grind was no fun. At least we had some time to manage, but right now we haven't seen a down day. We have seen 3 down days in 3 weeks. That's insane rally. You really have to be careful getting long in here, because we could easily fall back really fast. Then again, we can easily grind higher. Although if we start, the market starts capitulating and we see some scary downside action before the 1700 number, I think that could be some sort of tell that you could see the markets fall. So I'm just going to give you a quick wrap on what the markets did today. You have the S&Ps up down 4.5 at 1683, the Dow down 10, 15,503, and these are the futures, by the way. I don't pay attention to cash as much unless I'm trading options in them, because the cash always are behind the futures. The futures lead. The Russell down about 7.2. Bonds down 28 ticks, rallying back from a low of negative 104 on the day. You have the 10-year up a little bit. You have the yen down about 1%. You have natural gas down about 4 cents. Oil down $1.95. Gold down 13. Silver down 11.4. VIX up about 52 cents, and VIX futures up 15 cents. And the VIX right now is 1380. So let's do a quick rundown on the VIX, guys. And again, phone lines are still open. The number is 312-970-9058. Call in live on the show and ask a question. If nobody calls in, that's fine, but I'm still leaving the lines open for you guys. So just feel free to call that number. It's Strategic Trading Radio's number, 312-970-9058. Feel free to call in. So we have the VIX here. I think for us traders, we're definitely starting to get long the VIX. We've seen some serious lows in the VIX, but again, we didn't bottom. So if we can get another pop to 120, or even like right here, the 18 zone. That would be extremely nice for us traders. We really need a pop in VIX. If we get a pop in VIX, I think you can start covering and maybe even get long the S&Ps if we fall enough. There's no real reason for the S&Ps to just crash and burn here. At least I don't see anything, but for a lot of traders it would be kind of nice if it did. But again, retail sentiment is at crazy highs, and you have to kind of be careful coming in here. You really have to be careful being long the S&Ps. But again, if we get some sort of failure in here, I can definitely see maybe buying the S&Ps at the 1500 level. Okay, furthermore, I'm just going to pull up some charts. You have the Russell, and it's just taking a second to load. You have the Russell grinding higher, and I'm just going to... You have the Nasdaq being a little bit weaker, but we saw some serious strength today as Apple had good earnings, and we'll talk about that a little bit later. You have the Nasdaq up like that. You have gold falling. Seeing kind of some bearishness in gold. I think I'm going to start shorting some more gold products. Then you have ZB, which is bonds. Bonds falling, but of course kind of bouncing back from the lows. And I'll bring up a short-term chart for you guys. You see we went down to 133.16. I covered probably... I had a short call spread in TLT, and I think I covered it like just right around here for a small profit. When we just gapped down the markets, it was quite easy to do. Then we have gold, we have stocks, we have oil. Oil has been getting pretty weak, and I think if we can get oil to start falling, I think we can get the S&Ps to fall also. As you can see, the S&Ps have risen with oil. Of course, oil's been in this trading range with some of the volatility, but if we can get oil to fall, we can definitely get the S&Ps to fall, just to kind of show you how that reacts. See, in 08, oil went up to 147, stocks and oil crashed. You get oil up to 116, stocks and oil crashed in 2011. You get this, we fell a little bit in oil, etc., etc., etc. So just want to show you guys that if we can get oil to fall, that would be really good for stocks to fall also. That is if you're bearish in the market, which I pretty much am. Like, I'm not saying the markets need to go down immediately, but I think we really are due for some downside action, and then I'm not going to be very happy if we don't get it. Alright. So we have SPX, gold, bonds, stocks, and then we'll just take a quick look at the yen. The yen right here, we're not seeing a whole lot happening in the yen. We're kind of bouncing around this general area. I think the yen's buyable. Like, from an economic perspective, the yen is just terrible, but I think you can definitely buy into this range. Maybe if we see a pop up, that would be nice, but again, I think it's quite likely that we see a quick pop lower, and then one of two things are going to happen. If we break below our lows, that would be worrisome, but I think you can see a quick pop to the upside if we pop lower. And again, if you want to call into the show, the number is 312-970-9058. The lines are open right now. Do not try calling while the show is not open because the lines are closed, but call in to 312-970-9058, and hopefully we will get a caller. If anybody has any issues with these lines, send email to strategictradingradio@gmail.com over anything at all. Just feel free. So I'm going to take a look. I just want to show you guys some of the stocks, and then I use a watch list No. I use a special watch list, but sometimes it's kind of hard to get in here because of the way there's so many watch lists in the public. But if I can get it, no. Okay, guys, sorry about this, but I want to show you this. It seems we may have a little bit of an issue. Let's see. Okay, no, we're not going to be able to get it up, but I'll just show you the default list on here. These are some of the major stocks, FSLR. You see most everything's pretty weak. You have to be careful with Apple being strong, though. Some of the major stocks were pretty strong, like Apple, strong. And then I'll just take a look at this for you guys. I'll give you the quotes because I have something up on my other computer here. You see some strength in Microsoft, which is good because we just saw a pop. Most of the strength was like in VIX. You got Facebook, Hewlett Packard, the short, a leveraged short fund FAZ. You have the short bonds, and then you have short microcaps, and then you have Apple being the strongest on the day, which pushed the Nasdaq up about 0.75%. Everything else was red, but the way the market reacted is kind of worrisome, so I want to be careful. You have WLT down 18%, gold miners down 5%, Newmont down 5%, SLW, which is silver wheaten, down 3.5%. You have US Steel down 2.1%, which is good for me, by the way, because I have an iron condor and it went out of its range. Oil down 1.8%, Groupon down, SPUX down. A lot of these stocks, though, coming in, they have earnings. So with these earnings plays, you may see some sort of fake out coming into the earnings. So furthermore, we're seeing general weakness today, but we're kind of getting pops in the market, so it's kind of worrisome. It really is worrisome. However, if we start, again, I'll say it again, if we start capitulating below 1700 and don't touch 1700, and we start falling, I think that's extremely bearish for the market because it's a big deal to people to get the S&Ps up to 1700. If it doesn't get to that mental barrier, I really think we can see some downside action in the S&Ps. We had a strong close, so I think we can probably sell that strong close coming in, but I don't know if that offers any real edge, but it gives you something to do. So we're going to go on a quick commercial break right now. Well, there really is no commercials, just a break for me to stop talking for a few seconds. And again, if you want to call into the show live, it's 312-970-9058. If nobody calls in, that's okay, but I'm still leaving the lines open. Thank you. Welcome back to Strategic Trading Radio Live. I'm your host, Alex Weisenbach, and I am 12. To let you know, I've been trading for 3 years, and I've been doing this show for a little while besides my trading endeavors, which right now trading is not fun for me, considering some of the options trades I've been doing. It has been a very hard market. So, I'm taking a look at some of the trades here that I was thinking about doing. We have the S&P up just about 4.25. You have gold down a little bit. Bonds getting really bearish, but then popping up just a little. Most of the stocks on my screen right now, though, are extremely bearish. If you want to call into the show, ask a question, or give your opinions, call 312-970-9058. Follow the instructions given by Google, and you'll be put on the line with me. Lines are open right now, so feel free to call in. Okay, so this is the segment. This is the last segment of the show because today the show is only going to be a half hour. So I'm going to go just through a few stocks, and it may last a little longer than a half hour, but I'm still going to go through everything. So first, I'm going to take a look at WLT. Okay, so as a put seller, a lot of us got trapped in right here and fell through or right here. So what ended up happening is we got some interesting plays coming in. We bought some, got overbid, and then crashed. Okay, so we're down 18% today. That seems to have been happening in WLT. However, I think we can start buying the stock back, maybe on another leg down. Be careful with it though, but I'm going to show you. You have to be careful with this, so feel free to trade a little bit, but again, be very careful, and I'll go out on a monthly also. It's a very bearish stock. But maybe we've seen a short-term bottom. We haven't hit a low yet here. Our low is right here, so we may have some interesting trading coming in. So I'm going to go through a few strategies with you guys. Okay, so if you're extremely bullish, what you do is you just go ahead, sell a put. So it's probably going to takes up about $1,000 in buying power reduction, and actually that's a lot smaller than we would ever, a lot bigger than we would ever want to be. 10 contracts. So in real life, it's all going to tie up about $100. Your max loss is $955, because that is, you take your strike, subtract by the credit received, that's what you get. That's about 68% probability of success. Or you can sell the 11s for $79 and you get a 54% probability of success. Sorry about that, guys. That was my other computer on low battery. So going back here, we have Walter Energy. So you can sell a put, which is real good to do in a smaller account, but you can also sell a vertical spread. The vertical spread, I'm going to have to change this, but for now, I'm just going to do this. Okay, so vertical spread, you have a 34-cent credit in it, so I'm going to widen the strikes just a little bit to 2 strikes wide. 56-cent credit, max loss $144. So I'm going to show you something about calculating your probability of success. We're going to go to gadget tool here, and then you go to calculator. So you take the calculator, and I'm just bringing it out. 1 second, guys. And I'm going to close this up because limited space on the screen to try to broadcast. Okay, so you take your max loss divided by the width of strikes, and options, everything is multiplied by 200 because everything is worth 100 shares. So we have 144 divided by 200. You have a 72% probability of profit. That's probably as best as you can get it right now, but you might, considering after hours action, you might be able to do this. So sell vertical, and then 53-cent credit, and change this to 1. I'll do this in just a second. And then you get the 12.11 for 53-cent credit, and then you get the 12.9 for $1. That's, did the strikes just move on me? Just 1 second. No, the strikes didn't move on me, but it's probably best to stick with the 11.10 because there's still 54% probability that stays in the money. And again, if you want to call into the show live, the number is 312-970-9058. Feel free to call in, ask a question, ask a trading question. Okay, so I was just testing the camera there. We're going to set up video broadcasting in just a few days. We're going to set it up so we have everything. Okay, so next, we have WLT, we have VXX. There's some real good room for VXX, VIX short term, and then you could easily sell a vertical put spread for 28-cent credit, and that's a little low, and I'm going to go ahead and change this. I'm going to go ahead and change order default. So order defaults, I'm just going to, for you guys, I'm changing the order default to 1 to make it easier for you guys. And then I'm going to go, okay. Okay, so now all the orders will be 1. The thing is, there's the puts in here are a little weird looking. They're really, really cheap. And if we go out further, the puts are still really cheap. They're a little better 58 days out, but it doesn't make sense to do anything VXX yet. Okay, so then we go to VXY. And the puts make a little more sense here. So let's try this. Sell vertical 36.35. And the reason I did that is the implied volatility in the stock is so high, and I'll show you. The implied volatility in the stock is so high, it's 109% that you get this extremely different probabilities versus something else. So we'll take a look at this. Okay, so we need, okay, but that's just considering the width here. And then I'm just going to check the vol. I'm going to just check how liquid this is for just a quick second. You see, in UVXY, this seems a little wide also. So then we're going to have to go to the actual VIX product. So I'm looking at VIX 27 days. So for me, you know what? Buy vertical, and then 12.14, $135, max profit 65. Your buying power effect is 135. Most you can make $65, high probability of success. You can do a trade in the VIX, and it makes sense because look at where the VIX is trading at. And by the way, for you guys who are using Thinkorswim, you may want to just take a quick look at the VIX futures, and let me adjust this default. Okay, something's messed up on the chart, but we have VIX futures right now, and this chart seems to be a little bit messed up. I'm not sure why, but I just want to let you guys know that you have VIX futures on Thinkorswim now, just introduced. But until now, I think we can continue to see a pop up in the VIX, hopefully to around 18, 20, 22. That zone, if we get that pop, that would be really nice. But again, if you want to call into the show, the number is 312-970-9058. Ask a question, talk about markets with me, and you will be put through. Just follow the instructions by Google and take a quick look at that. And actually, it looks like we're going to go much longer than I expected. I just want to take a quick look about Apple. No strategy, but you have to be careful because of Apple's strength in the market right now. We could easily keep popping higher, but maybe this is something that could drive Apple stock back up, but we could easily just go down. So for me, the best trade would probably be an iron condor. But the thing is, like, if I'm looking at Iron Condor, but I then look at the vol, there's not enough implied volatility. So what you could do is you could do a calendar spread, and we'll see what the calendars are like. Calendars may be too expensive though. So first, you want to do a bullish or you have to do a bearish calendar. I think I'm going to do the bearish, the slightly bearish calendar, which is I want the stock to fall about $5, which is easy. So you take it, you buy calendar, and you're buying the back month and you're selling the front month. So it's a $568 debit. So that doesn't make sense. So then you might have to buy a butterfly. So buy butterfly, and then you want contraction vol with a slight bearish edge, 440, 435, 430. If you hit 435, you have to kind of wait to expiration though on this. So it's really slow to do a butterfly. Otherwise, that's the only trade in there unless you want to go directional. For me, I don't have any directional bias in that stock, so I'm going to be careful. Okay, guys, and if you want to call on this show live, the number is 312-970-9058. Definitely call in if you wish to. I'm leaving lines open to all the way till 5:30 if you want to call in live. For now, I'm going to remove this graphic though, so I'm just going to remove the graphic. Okay, here we go. If you have any issues, technical problems, or questions, send an email to strategictradingradio@gmail.com. Alright then, guys, I'm going to go on a quick commercial break, and then we'll wrap up the segment with emerging markets, Mexico, gold, and J.C. Penney. Okay, thank you. I will be back in about 2 minutes. Welcome back to Strategic Trading Radio. I'm your host, Alex Weisenbach, and I am a 12-year-old trader. I just want to let you guys know I'm going to do a quick overview. If you want to contact us, feel free. The number is the email is strategictradingradio@gmail.com. And sorry about that. What is the issue with the big B on the screen? Okay, here we go. Okay, there we go. If you want to call into the show live, the number is 312-970-9058. Check us out. Ask us a few questions live on the show, whatever. If you want to send an email to us, then email strategictradingradio@gmail.com. And for you guys who want to learn more about options, stocks, and futures trading, definitely go check out tastytrade.com. It's run by these awesome traders, Tom Sosnoff, founder of Thinkorswim, and he's the founder of Thinkorswim, And he is also a 30-year SIBO trader, and now he's running a financial TV network called Tasty Trade. Alright then. So, considering my crazy contrarian approach, we're going to go ahead and take a look at emerging markets. Okay, emerging markets, ETF. Okay, so emerging markets have been obviously in a downtrend, but we're getting this pop-up. So I'm just going to take a look at this implied volatility. We're getting this pop-up, this interesting pop-up, but let me take a look at today's option stats. So we've gone back to 37 percentile. We're at 40, which is a little high. Remember it at 45, though. Yep, right up there, and then the 40 level. I was trying to get long this thing up into here, but it just kept falling and falling and falling. I think I got out of that trade for a scratch, though, but we're getting this movement up. So I'm selling emerging markets. Alright then. So how do we sell? We have 22% implied volatility. So let's check what we can get for a vertical spread. Sell vertical. This is a half point wide vertical spread. So I want to bring this out. Okay, so we can get it for a 31-cent credit. Your max loss $69. Your max profit 61. But I don't want to just take that, so I'm going to go out farther. 37.5. It doesn't make sense to go out any farther. So you're gonna either have to do a $1 one for a 31-cent credit, which isn't the best. Or what you could do in here is you could do a bearish calendar spread. So these need a little more patience, but if you want to do a bearish calendar, you could do this. Buy calendar, 44-cent debit, then your max risk is $44, and then you can probably get maybe 20 cents out of it, and you can probably get 20 cents out of it. So you want volatility to expand, and you want the stock to fall a little bit to 38.5. If you're super bearish, what you do is you just buy a vertical, and here a vertical put spread. For me, again, I'm going to widen this out a little bit, so 39.5, 37.5. Oops, no, we're going to need to go to 40.5, 50-cent debit, so 50% probability of success. Or you could sell the 41s, which is still like that low. 42s. Yeah, we're not going to get much farther. So what you're going to, because in some stocks it's just a little different. So vertical. Okay, so buying the 39, selling 39 halves, but I'm going to go with buying the 40s and then selling the, oops, here we go. Buying 39 half, selling, I don't know why I'm struggling with this. And I've got all my strikes messed up, sorry guys. Okay, 39 half, 41 half, 78-cent debit. Yeah, it doesn't really make sense to do 39.40. Here we go. I'm just playing around with these. 39.40. You can do that for the 39.40 or 39.41. It's like a 49% probability of success. So for me, 39.40, maybe do 2 or 1, whatever, and then just do that in trading. Alright. Okay, next one. EWW, which is basically the same thing, except it is Mexico specifically. Same thing, pop, alright, short. So you take this, you go with 67, 66, you sell these. Sell vertical calls, 38-cent debit. You're gonna witten the strikes to make more sense. 66-cent credit. Your max loss 134. You bring up the calculator. Sorry about that, guys. You bring up the calculator. You take the calculator, then you're going to take your max loss, 134, divided by the width of the strikes. In options, everything is multiplied by 100 because an option represents 100 shares. 134 divided by 200 equals 67. You multiply that by 100 and it is 67%. That's what it's going to end up to be. 67% probability of success, 66 cents credit, 2 strikes wide. Looks like a good trade to me to sell some EWW. I don't believe I have a position there yet, but I'm actually going to put it on tomorrow. Okay, then we have GDX. GDX gold miners. Alright, well, GDX, I want to sell gold miners, but I just want to show this to you guys that we went down hard in gold miners today. But for me, it would make more sense to sell gold. Just to sell some gold. Keep this position relatively small. Remember, gold is bigger. A bigger ETF, the GLD ETF. So 39 cent credit. Alright. 61% probability of success. Width and strikes just a little bit. 71 cent credit. 129. Your probability of success is around 65%. And you can get that for a decent credit to sell gold. Okay, and then last thing, JCPenney. I want to get long some JCPenney. So I'll show you a chart up here. We've been falling hard in JCPenney. I think you can get long some JCPenney just for fun. We've kind of been in a few month uptrend, but with range. So looking at a trade, a couple things you can do. Again, you can't get a whole lot of premium in here. Coming in earnings season, it's been a little hard to get some premium. Just looking at August, like you have more premium in the weeklies right now. So I'm gonna do something I usually don't do. I'm gonna sell 16 days to expiry vertical. Okay. 15, 14, 31 cent credit. Oh gosh, that doesn't make any sense at all either. Okay, well, I just want to take a look at this, so let's go 8 days out. Sell vertical. 15, 30 cents. We can do this for 30 cents. I'll probably do it 2 times. Get for 30 cents, and then, or you can go wider, sell deep and wide, 1 month, sell, deep and wide. Come on. 1 month, 2 strike vertical. Okay. Doesn't make a whole lot of sense either. Only 49 bucks. So you have to sell a 1 strike wide, maybe do 1 or 2 contracts. Stock is pretty inexpensive, so you can do that. Okay, thanks for listening to the show. I hope you enjoyed everything. We had no callers today, but again, the lines are still open for another 20 minutes if you want to call in. I hope you enjoyed my show, and thank you for listening. If you want to send us an email us at strategic